Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Wednesday morning, cues are fairly upbeat when it comes to what the global markets are doing at the current juncture. Asian markets were higher, led by Japan. We saw Wall Street clock a very strong rally on the hopes of easing tensions between US and China, and the US futures also fairly upbeat. GIFT Nifty hinting at a gap up start for our markets, a 200-point uptick as far as the GIFT Nifty is concerned. Looks like we are poised to clock in a 7 straight session of gains. Of course, we have managed to reclaim 24,100 day before yesterday, and we are holding on to that level. But the crucial part is that the Nifty Bank Index managed to close at a record high for a second straight session. In fact, came very close to that 56,000 mark as well. Will the rally continue? And 56,000, could that be a possibility today itself? We'll try and ask our experts about that. But lots of result reactions as well. The likes of HCL Tech, Havells, all of them will be reacting to numbers. Your stock related queries will also be in focus on the show, so keep them coming in on our live feed. We'll try and get them addressed. But as usual, before we move forward, let's quickly take a look at the top headlines at this hour. Wall Street snaps a 4-day losing streak as stocks rally on hopes that US-China trade tensions could ease soon. Dow jumps over 1,000 points while the Nasdaq and S&P 500 gain over 2% each. Trump says he has no intention of firing Fed Chair Powell, sparking a rally in US futures as well. Asian markets mirror Wall Street moves, opening higher on hopes of de-escalation in US-China tensions. Trump says 145% tariff on China is too high and it will come down substantially. The GIFT Nifty, as I mentioned, hinting at a gap-up start for our markets. Oil prices extend gains as investors weigh fresh round of sanctions on Iran and a drop in US crude stocks. Meanwhile, gold retreats from record highs as Trump softens stance on China. And HCL Tech marginally misses estimates, capping off a disappointing fourth quarter for the big four in Indian IT. Clients turn cautious and adopt a wait-and-watch approach, but deal wins remain strong for the sector. Also, watch out for numbers from LTI Mindtree and Tata Consumer Products today. And at least 26 civilians were killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. This is the deadliest attack in the valley since 2019, Pulwama strike. The resistance front has claimed responsibility for the attack. Meanwhile, Prime Minister Modi has arrived in Delhi after cutting short his Saudi visit, and FM Sitaraman has also cut short her US trip. Well, heartbreaking visuals there coming in from Pahalgam. Of course, the PM is back in the capital and he is taking stock of the situation and will be holding some crucial meetings through the day as well. But looking at the cues for trade then, markets have extended their gaining streak to 6 days yesterday. Today, of course, there is a strong possibility of a 7-day rally coming in. Remember, this is the longest gaining streak that the market has seen in over a month. The Nifty Bank Index, of course, has been the cynosure of all eyes. It saw a record high yesterday for a second straight session, came very close to that 56,000 mark. Looks like we are poised to clock in that level today itself. Banking heavyweights continue to see buying. The likes of HDFC Bank, ICICI Bank are already at lifetime highs. In fact, HDFC Bank became the third Indian company to have a market cap of over 15 lakh crore rupees. FMCG stocks were in focus yesterday. They rose after a down day before yesterday. On the back of a positive brokerage note, UBS has said that earnings may be turning the corner for FMCG, and which is why we saw some of these FMCG names doing well. Of course, Tata Consumer kicks off the earnings season for the sector as it reports numbers today. Bajaj Auto and Hero MotoCorp, these two stocks were in focus as they fell on the back of a Jefferies downgrade. Gold financiers, however, saw major gains as gold hit a record high on MCX as well, topping that 1 lakh mark for 10 grams. Aside of that, if you look at the some of the cues, other cues coming in, foreign investors have remained net buyers. They have turned buyers recently and they continue to buy. They have bought shares worth 1,300 crore rupees in the cash market yesterday, but DIIs were sellers to the tune of 885 crore rupees also in the cash market. But on that note, let me bring on board our guest for today. Joining me is Vaishali Parekh of PL Capital. Hi Vaishali, great to have you on the show. First of all, it's been a very good vertical move on the Nifty. If you look at the last 6 days, today as well, GIFT Nifty is hinting at a gap up start. How soon do you think we are poised to head towards 24,500?
Very good morning, Nandita, and thanks for having me on the show. So, yes, we've had our weekly target resistance of 24,500, but we were waiting for 24,200, which was a near term hurdle that to be crossed. But today, we are seeing a gap up opening, and once we see a sustenance, I think it's easy to get to 24,500 as the next target.
And the Nifty Bank Index very close to 56,000. Of course, it looks like we are poised to clock in that level today itself. What is the near-term resistance level that you are, in fact, that you envisage on the Nifty Bank Index now?
So we were actually expecting 56,000. It has moved past that too. So we'll wait and watch. I would technically really say that, as far as trading strategy is concerned, no harm booking profit at this level. Let's wait and watch, because if this too is sustaining, that means there is some real inherent strength and we can go further towards 56,500 to 57,000. But for now, to my understanding, 56,000 should act as a resistance.
Okay, 56,000 should act as a resistance in the pre-open. As you rightly pointed out, we've already clocked in that level. In the pre-open, 56,097, that was the level on the Nifty Bank Index. The Nifty in the pre-open is hinting at a gap up of 200 points at start in tandem with what the GIFT Nifty is doing. 24,357 in the pre-open for the Nifty, and for the Sensex it's 80,142. So 80,000 as well. On the charts for the Sensex. But what would you do with the likes of an HDFC Bank and ICICI Bank, given the fact that both the stocks have had a great quarter, and stocks are at 52-week highs as well, and InCred Bank as well, it has kind of snapped out of its losing streak. Of course, there's been reports of a forensic audit on its MFI portfolio, but the bank has actually clarified that they have not engaged EY for a forensic audit, but they've engaged EY to assist internal audit department in reviewing certain records in the MFI business. But InCred Bank has had a vertical up move in the last few sessions, saw a 5% cut yesterday. So all these three counters, how are they looking on the charts right now after the recent moves?
So, well, I would say HDFC Bank, ICICI Bank, continue holding to those who are holding. Of course, won't recommend a fresh buy at these levels. Maybe HDFC Bank can look at a target of 22,000 to 2050 levels. And ICICI also hold with a trading stop loss, because we've seen a good run up coming in. So this can go towards around 1450 or so. Now, as far as InCred is concerned, well, we saw a good, purely on technical terms, we saw the stock bottoming out at around 650 levels. From there on, it is surging high. Still, the trend looks intact. I would say there would be a range of 750. It needs to cross 840, and I think it can go up towards 900 to 930 levels. So, view is positive, buy with a support of 750.
Okay, that's the call on some of these banking names. But from banking to IT, of course, 3 minutes left for the markets to open. But let's take stock of HCL Tech numbers as well then. The numbers came out, they were largely in line, but mild miss, so to say. The net profit was down 6.5%. That was largely in line or marginally, below what the street was estimating. Revenues, the rupee revenue grew 1.2%. The EBIT margin came in at 18% vis-a-vis 19.5% on a quarter-on-quarter basis. Of course, there's been a dividend of 18 rupees per share for FY25. In terms of dollar revenue, it was down 1%. That too on a sequential basis. The constant currency revenue declined 0.8%. Street was working with expectations of a 0.6% decline. If you look at the FY25 constant currency revenue growth, that has come or that has met the guidance. It came in at 4.7% vis-a-vis the company's guidance of minus 1.3 to 0.6%. So on the revenue front for FY25, it has met its guidance. The total contract value was also pretty strong at $2,995 million in the fourth quarter. The FY26 guidance, revenue growth expected to be between 2 to 5% on a year-on-year basis in constant currency terms, and for the margin, it's between 18 to 19%. HCL Tech CEO has also mentioned that there's been no major impact seen yet as a result of the tariff war, but it could hit all industries, and consumer and manufacturing may feel the heat first. He's also pointed out that generative AI-led efficiency is now core to their client strategy, and discretionary spending is looking weak, but AI is being seen as a big opportunity going forward. In terms of the brokerage verdict, Citi has maintained a neutral call, target price at 1510 rupees. They've maintained that it's a decent quarter in the current environment, and they've also said that the management guidance is implying 0% growth for each quarter in FY26. But all in all, it's been digested pretty well, because in pre-open the stock is up somewhere around 5%. Very quickly, HCL Tech has had a good move in recent times, 2-3 sessions. Vaishali, what's your next level here, HCL Tech?
So I would say that yes, IT sector on the whole was beaten up because of this Trump issue and all. But I think and these result is hardly a trigger for any further fall. It is opening with a gap up. I think this is a resistance. 1560 is a resistance. Once we see the stock moving above, it can go towards 1600 plus.
Okay, 1560 resistance can go up to 1600. That's the call. Hold that thought. Let's take a look at the market. We have seen a strong open. It's a triple digit up move on the index, a 160 point bump up on the Nifty, 24,300. That's where we are at. Sensex back above that 80,000 mark. So good looking screen, and the mid cap index continues its outperformance, almost an 0.8% kind of a gain coming in on the mid cap index. The bank Nifty right now at 55,888, a 200 point up move. But of course, in the pre-open, we saw the Nifty Bank Index hitting 56,000. In terms of the advance decline ratio, early days to really point out whether it will sustain or not. But the advance decline ratio is 9:1 on the NSE, 1497 advances to 175 declines. In terms of the gainers, I can see HCL Tech top gainer, 5.5% up move. It has pulled up all the IT giants along with itself. So Tech Mahindra, Infosys, Wipro. These are some of the other gainers on the Nifty. In fact, TCS also in the green. IndusInd Bank has come out of its one-day losing streak, so to say, up 2% among the top Nifty gainers. The bank has, of course, clarified that they haven't really engaged EY for a forensic audit, but just to assist the internal department in analyzing the MFI portfolio. So yes, that's another stock. But in terms of sectors, I want to see what sectors are taking the lead at the current juncture. Of course, realty was one pocket that did well yesterday, along with banks, and even the FMCG pack was upbeat. Let's see what sectors are really taking the lead at the current juncture. All the sectors I can see are trading in the green, barring a pharma pack, which is clocking in mild losses at the current juncture. IT, that's the top gainer, 2.5%, as being suggested by all the names I mentioned that are the top Nifty gainers at the current juncture. You have autos also up 0.6%. Metals are doing well, 0.8% kind of gain coming in there. Just want to see what the FMCG basket is doing. FMCG should come up on your screen. It was trading with gains. Yes, it's trading with mild gains, 0.3% kind of an uptick. So all in all, a strong start, and the IT pack is leading from the front today after HCL Tech has met its FY25 constant currency revenue guidance, up 6% as we speak. But what's not doing well, extending losses from yesterday's Bajaj Auto. Kotak Mahindra Bank not doing well, Eicher Motors, Sun Pharma and Cipla. These are just a handful of losers on the Nifty. But of course, just about 5-6 losers on the Nifty. Aside of that, all the other stocks are in the positive zone. So all in all, Vaishali, great start. But in terms of recommendations in this market, I would like to know what would you like to suggest for our viewers this morning?
Well, so I would say definitely. So since IT should be the sector that should be looked into, so I would focus on Persistent. Persistent also is getting into an upward move. It continues. So I would say buy with the support of 4,800 levels. I would look at a target of 5,400 as a trading target. And the other stock to my liking is Woodco. It's just ready for a takeoff coming above. If it sustains about 240, 42 levels, I think this is ready for a stock coming target of 265, 270. So the support would be at around 225. Look for a target of 260.
Okay, that's the view, Persistent. But another stock that's on my radar is Chola Investment. It saw a downgrade coming in from UBS yesterday and ended the day lower by 4-5%. But today there is an upgrade from UBS. The stock In fact, is higher by 6% or so. UBS has upgraded the stock to buy, and the target price has been raised to 1950 rupees per share, whereas
It
CLSA
was
target
tough
was
day,
at
I must say, yeah.
1600. The stock had violated that. Sorry. Okay, so Chola, in fact, had had kind of broken below that 1600 mark, but it's reclaimed that level now. In terms of near-term targets on Chola, what would you suggest, Vaishali, and what should the strategy be here?
So the trend continues. It's just going into a minor consolidation. So I think as long as 1550 levels are held on, this stock is likely to go above 1650 to 1700 levels. So view is very much positive. Indicators are also supporting. Right now, we are just seeing a sideways move.
Okay, positive. But look at Havells. The stock has seen good traction recently. Numbers have also been good, but I think it's come under some bit of profit booking today. 3.5% lower on this stock at 1600. What would you do with this stock now?
I would say look for a buying opportunity. 1550 again is a good support. It's already got into a trend. So a little bit of a retracement cannot be ruled out. We've seen this rally coming right from 1450 levels to around yesterday. We saw a high of around 1670, 1680. So a little bit of consolidation. I would say accumulate with support of 1550 and look for higher targets. It can get into a trend to go for 1750 levels.
Okay, 1750 on the higher side for Havells, that could be a target. And Naveen, in fact, from on our YouTube feed had sent us a query. Naveen, hope that answers your query. But another stock that's in focus is M&M Financial. Came out with its numbers. The stock is trading flat with a negative bias, and in the last 1 month, it has seen a 6% cut. The profit is down 9%, but the interest income is up in double digits on a YY basis. Any particular or any clear trend emerging on the charts of M&M Financial right now?
Actually, there's nothing really happening. It's just been in a sideways move. But I would say if the stock has to show strength, 260 acts as a very good support, and the stock needs to move above 290 to 93 levels. So I would say keep a range right now on a near-term basis of 270. And if it surges, goes towards 290, that's the level to look for. Above that, it will get into a trend.
Okay, that's the view, and of course take note of the level that was mentioned by Vaishali. But Vaishali, Delta Corp is the other one that reported numbers. Profits saw healthy growth, almost doubled on a YY basis, but revenues were down, margins also under pressure. Looking at the stock, it has seen good traction. If you look at the last 5-day performance, today it's up by 1% or so, but it's sub 100 levels. But would you play the stock for 100 or 105 rupees on the upside?
Quite likely, because it is showing a long-term trend reversal also. So I would say 85 would act as a support. And once we see, and it has gone above yesterday's high also. So I think the near-term target of 100 is very likely.
Okay, near-term target of 100 on Delta Corp is likely. Talk about Varun Beverages. The stock hasn't really done much. If you look at the last 6 months, last 1 month performance has been fairly sideways, although it has been on the positive side itself. But there is news flow that the company has started commercial production at its Prayagraj plant. Here at 556 or 557 odd, what would you do? Because it's still it's quite some time away from its 52-week high of 681 or so. So would you suggest buying it for higher targets?
Well, even this stock is just in a range bound. So either buy above 570 levels, that would bring a clarity, or at a dip around 540 levels. So either ways, take a view. 540 should be held on, and above 570, 580, this will get into a momentum. So that's the way to look at this stock.
Okay, that's the view on a Varun Beverages. But what about a Dixon Tech? The stock has seen a good recovery. If you see the last 1 month performance, it's up 15-16%. Of course, somewhere in the middle we did see a steep correction coming in on this counter. But do you say that can you say decisively that the trend has reversed for now? The stock has done fairly well in recent times. Yesterday as well, it was up somewhere around 6%.
Trend has definitely reversed. I mean, we saw the stock going towards low as 13,000 levels, and from there on, it's picking up. So it's definitely a perpendicular rise. I won't say a fresh buy zone at these levels. If it retraces to around 15,000, that would be an ideal level. But to those who are holding, continue holding with the stock.
Okay, Dixon Tech, if you hold it, continue holding the stock. What about realty stocks? Anything that's finding favor with you? Because the index, has been clocking in good gains recently, 3%, 2.5%. That's the kind of gain the index is clocking. So, any stock that is catching your fancy?
Yes, Nandita. So actually, most of the stocks have started doing well since 2-3 days. So one of them is Godrej Properties. Good consolidation, good bottom formation at 2000 levels. It's now trying to get into the momentum. So this is technically well placed. Lodha is doing well, even Oberoi. So these should continue to do well in sync with the market.
Okay, that's the view then on the realty pack. Godrej Properties looking good from this basket. Let's shift focus to some viewer queries then at this juncture. I can see a query that has come in on IEX. Deepu Jayan wants to know what's the view on IEX for the long term of 2 years view. Any thoughts? MCX has been doing well. IEX, of course, the stock is quite flat right now, but it has seen good momentum, not great gains, but it has been in the positive if you look at the last 1 month chart as well. But would you go for an IEX? If yes, what are the long term targets, and how is MCX also looking on the charts now?
Definitely. So let's talk about IEX first. The stock, I'm looking at it quite closely. I mean, yesterday we saw it going towards 192 plus. So that also happens to be a weekly resistance level. So let's see the stock that, yes, it has got into a trend. 180 acts as a good support. Once the stock we see moving past 192.50 and 193 levels and sustaining above that, that gives us a further upside of 220 to 230. So yes, my view is positive to be bought at every decline with a support of 180. Now, MCX has already started doing very well, and I think there is still scope for MCX going further high, because that too on my daily chart, if I'm looking at it, 6200 acts as a resistance. So wait and watch. Support level comes between 5600 to 5400 levels. 62 level needs to be crossed, and then we get higher targets.
Okay, and what about BSE? The stock is just about 100 rupees away from its 52-week high. Last 1 month, we've seen the stock pick up traction, and how 35% up move. The stock did come under correction, 2-3 months ago, but it has done very well to recoup all of those losses. Would you buy at these levels?
Not to be bought at these levels, but yes, it's a breakout. So if you are an aggressive trader, yes, please go for it.
Okay, for aggressive traders, please go for a BSE. Okay, then another query then coming in from Alex wants to know your thoughts on Crompton, whether it's a safe play at the current juncture. Any thoughts chartically? How is the Crompton looking like right now?
So Crompton, I think it should do well. It is a good buying opportunity, favorable risk reward ratio, making a good bottom at around 330 levels, 325, 330 levels. So once we see the stock moving about 360, 365, this will be going towards 390, 400. So I think go for it.
Okay, Alex, hope that answers your query, but sure, Alex, go for it. That's the call from Vaishali. But another stock that has been doing phenomenally well is that of a KFin Tech. Last 5 sessions itself, it has rallied almost 30%. There is a query on our feed from Naveen, and he wants to know what should be done with this stock. But at 1360, how is it looking? Because it's still got some distance to cover if you compare it with the highs of 1640 or so. Good time to accumulate?
So I would say, see, if you're a short-term trader and you've bought it at lower levels, then I think this is a resistance, book partial profit. But if you're a long-term, if you bought it with a long-term perspective, I think continue holding. Of course, we cannot rule out the in-between whipsaws, but in all likelihood, this can go towards 1600, 1700 levels. So I would say continue holding. Look at Keynes, KFIN, they all have started doing very well. So in my opinion, it's a game of patience. Hold on and look for higher targets.
Okay, that's the view on KFin Tech. But another query then on a Tata Motors coming in from Sameer Meher wants to know whether it's a safe bet for the long term. Tata Motors, as we know, had been badgered. It had been hammered out of shape, but it is just about attempting to make some bit of pullback. Last 5 sessions, 3.5% gain. Today as well, it's up by 2% or so. But at these levels, would you say that most of the selling may be over and the risk reward, looking at the risk reward, is it looking an attractive bet and good time to buy for the long term at least?
I would say so. Actually, the stock has really been battered, and purely on technical levels, 560, which was the low that was made, 560, 540, that is a very crucial support level, even on a long-term chart. So, if one has to buy and look for a target of 850 to start with, I think it's an attractive buy.
Okay, that's the view then on a Tata Motors, an attractive buy. The last stock really I want to get your thoughts on is an AU Small. It reported numbers yesterday. Would you look at the stock now? Just opening the charts, it's fairly flat at the current juncture. No, it's up 4.5%. In fact, as we speak, would you look at this stock now after the numbers?
So 620. So it's got into new round of momentum and come out of its long consolidation. So 620, 600 is the good support, and for a long-term perspective, this can do 760 levels. So yes, this is a level to look at.
Okay, that's the level to watch out for on an AU Small. With that, of course, we've come to the end of the query segment and our technical checks as well. But with that, Vaishali would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure, and I look forward to our next conversation as well. Thank you. Well, taking a look at the market before we get on board our next guest for today, it's a good triple-digit up move on the index. We are holding on to the 24,000 index, although has cooled off from opening highs, but nevertheless a triple digit up move there as well. 55,780 is where it's at, and as Vaishali mentioned, 56,000 will be a crucial resistance to watch out for on the Nifty Bank Index. The advance decline ratio is firmly in favor of gainers, almost 3:1 on NSE. That's the advance decline ratio for you, and IT is leading from the front today after a down day yesterday. The HCL Tech counter is up 7% after numbers marginally missed estimates, but brokerages are saying that in the current environment numbers have been fairly okay, and the company has also met its guidance when it comes to FY25 constant currency revenue. But on that note, let me bring on board our next guest for today. Joining me is Rishi Kohli, CIO Hedge Fund Strategies at InCred Alternative Investments. Rishi, lovely chatting with you, and we are chatting after a long time. Just want to ask you your thoughts on what's happening globally. The world trade order is changing and how, and every day there's some comment from Trump which we tend to react to, but of course now the reaction has been fairly on the opposite side, so to say. We are raging on in terms of recovery. So what is your prognosis of the entire situation and how it has unfolded really?
Yeah, thanks for having me on the show. Lovely to be back here. Yes, so obviously very different world from a few months back when we spoke, I think. And of course, Trump, we've seen this in the past also, that he has this habit of, making large comments, over the weekend sometimes on important days, etc. So obviously a lot more volatility compared to, typical presidents where the volatility is muted. So the volatility, I think, will remain higher for the next couple of years as long as Trump is around. That is very clear, and we've seen, the initial parts of that over the last month. But yeah, coming back to overall markets, I think, very early days and very confusing signals. Obviously, he has this habit of, giving these larger numbers and then bringing people to the negotiating table. And he's himself commenting now that the tariffs, even on China, may be much lower, than whatever has been said recently. So I think it'll all settle down, to much more normal levels than what initially it seemed like. Having said that, it is very clear that there's a global shift, against using the US dollar. China's built its own digital currency network. So all these shifts have been gradually happening over the last few years, and I think, these kind of episodes will only sort of accelerate that. So from a very, very long-term perspective, I would say very clearly the dominance of the US and overall the strength of the US dollar and it being there as a reserve currency. I think you've got the initial signals of, that starting to decline. And I think that will continue for many years now. And coming to markets, of course, a lot of markets.
Sure.
Yeah, a lot of markets were, I think, overextended. Yeah, thanks. So a lot of markets were overextended, I think. So, there was a jerk, of course, in that few days and, 1 week of that initial tariff announcements. And the recovery over the last week or so, especially in India, has been very, very surprising to most of us, most of the market participants. Having said that, more from a technical and a cycle perspective, if you see, since I focus more on quant, it is actually very interesting because, all the markets, whether it's US, India, they've all just corrected to the long-term supports and previous breakout points or previous channel supports and then bounced strongly from there. And in fact, the lows of that week or the few days around the tariff announcements are the lows of the month. So far, actually, apart from the panic that was created and of course the fact that, last few months, all markets globally were declining anyway. And again, especially India. So, it was sort of a continuation of that, and in a jerk, it sort of stopped. So on the balance, that seems bullish behavior. But of course, a lot of confusion, fundamental, macro, technicals, to come to a very clear conclusion.
Sure, but despite the fact that we've seen, US market, of course, staged a rebound last night, but, all of last week, if you see, US markets were down, even Asian markets were down, global markets per se were down, but we were outperforming. So given the pace of the recovery, would you be surprised or not surprised if, we hit or retest, all-time highs, say by June or so?
Yeah, I wouldn't be surprised. As I just said that on balance, at least from the data side, on balance, the structure looks bullish still. It has not got affected. And we had this sort of slow decline since the September peaks. And of course, October, Jan, Feb, these were panicky months with all small, mid caps, everything declining. Now, obviously, April has some seasonality. So usually April ends up being bullish and taking all negative news in its stride. May is usually the dangerous month where a lot of volatility comes in. And if this is a dead cat bounce, May you should start seeing declines again. But if that doesn't happen, then I think, yes, you could head back to new highs. I think for Nifty index, there'll be a significant hurdle around 25,000. If that gets crossed, then, 26,000 may just again come in a few days. But given the fast pace over the last week, I think, it may halt around 25,000 for some time, and then you'll get further signals from there. The good thing for India is that, the financial services and the banking index, etc., are already at new highs, right? And even in the decline, if you look at the financial services index, the Fin Nifty, right? So that hardly declined, right? I mean, even when Nifty was down at the bottom around 18%, Fin Nifty was down only like 6-7%. There was hardly any decline. So it was one of the strongest sectors, and it bounced back to new highs very fast. So that at least shows you that parts of the market are at least clearly bullish. So even if overall markets go into some sort of a time correction, you would definitely have sectors which are doing really well. So I think from that angle, there's a lot to look forward to.
Sure. So which are those sectors, Rishi? If you would like to elaborate, what should the India playbook look like right now? The investment playbook, banks, financial services you mentioned, but what about the other sectors? Which are the ones that one should look at in the current environment?
Yeah, sure. So bank, financial services, I mentioned more the technical and the cycle perspective, obviously RBI has been doing a lot over the last few weeks. So, the fundamental macro ties in as well. So not surprising, if all sort of signals coincide, then I've seen that, those end up being the best signals for the medium term at least. Otherwise, of course, from an overall sector perspective, the currency, so INR looks like, it could be stable to appreciating after a long time, right? Where obviously it has been a continuous depreciation for a very long time. And they've been step jumps typically, and we've all got used to it, including me. But recent action says that, even if it doesn't appreciate very fast, it'll at least be stable and minorly appreciating for the next 1 or 2 years. So obviously, if that happens, then, obviously not immediate
Sure.
impact is on IT pharma, maybe not that great for them. IT has been one of the worst, sectors in the last few months. Right now, it's more of an oversold kind of sector. So, today it's very strong, for example. So I wouldn't be surprised if over the next month or so, it does well. But from a medium-term perspective, I wouldn't be very bullish on that. The sectors which are looking interesting are, again, not very surprising, more, domestic related. So infra is looking good, auto is looking good, PSE index is looking good. Having said that, I mean, from my perspective, it's more short to medium term, not necessarily very long term. So from 1 month to 6 month kind of views, I think these are the sectors which look good apart from financials.
Okay, let's talk about the other pocket or other asset class rather that's been grabbing headlines on a daily basis, which is gold. No surprises there. $3,500 an ounce has been crossed. What's your view then? How is gold looking as a portfolio hedge now to you?
See, from an asset allocation perspective, obviously still looks good. And we've, in recent times, we've all seen the data, whether it's 5 years, 10 years, 20 years, 50 years, having certain allocation to that has obviously helped. And in different patches when, equities and bonds have not given returns, gold has. So from that perspective, I think it should continuously be there up to a certain percentage for all portfolios. Right now, from an immediate perspective, obviously, given the panic globally related to overall markets coming down and then with the tariff tantrum, etc., obviously, it has had a big spike over the last month, right? That obviously in a short term looks unsustainable. So, you could see some declines, etc. But I wouldn't, there've been some rumors and talks in the market that it'll have a big crash, etc. So I don't agree with that. I think, obviously it has got overextended. There's almost been a vertical rise over the last 1 month and over the last 6 months. So obviously that vertical rise is usually, unsustainable and will have some short-term corrections. So I wouldn't rule out a 5-10% correction in the near term, but from a long-term perspective, it still looks good.
Okay, any targets, if you talk about 1 year, 2 year, any targets on gold? 3,800, 900, 4,000 even for that matter?
It's possible. Yeah, it's highly possible.
Sure. So what is that, percentage of, in fact, what kind of allocation should one make in their portfolio when it comes to gold? Of course, buy on dips, that's the strategy you mentioned, right? So how much of an exposure should one really look at the current juncture?
Again, it'll vary based on, everyone's sort of risk reward perspective and overall objectives on the returns one is trying to get. But I think, at least 10% is a fair number. And then, yeah, it'll vary. It could go higher depending on what kind of portfolios one is constructing.
Is there a thumb rule now to look at, some alpha generation ideas in such volatile times? Any strategy, any particular strategy that you would recommend for our viewers?
Yeah, so as I said, sector rotation will continue, and that is actually a good signal because, as per our long-term quant research, and I may have mentioned this in the past shows as well, that as long as there is healthy sector rotation happening and there are some sectors which are doing well, that's a sign of bull markets actually, irrespective of whatever declines may be happening in the short term. So I think that will continue. So, having some interesting models, whether technical or based on fundamentals, to, sort of tilt weightages towards certain sectors and be a little more tactical on that, I think will make a lot of sense. Even on markets overall, I think being tactical for this year will make sense because it may not even if the recovery happens, it may not be one-sided. You may get 1 or 2 months of strong bounce, and then again it may go sideways. So it will not be as easy as, say, the last 2 years before from September the market started declining for us in India. Before that, 2-3 years were very, very easy. Whatever portfolios you had did well. So I think it will not be that. There will be a lot of differentiation. So one will have to be much more tactical and short term. And of course, if you come to very short term, then playing it through futures and options. So like we run market neutral strategies, for example. So I think there will be a lot of that kind of alpha in the markets, because there is already a lot of dispersion that has happened across stocks and sectors, right? Even within sectors that are doing well or doing poorly, the stock scenario is very, very different. So that lends itself very well to having market neutral or long short strategies, where even if you're long some stocks of one sector and short some stocks of the same sector, you can have alpha. So I think it is a good time over the next 6 months to 1 year for these kind of strategies, because while having lower exposures to market, you can still generate market-like returns, equity-like returns.
Sure. If you talk about this year, I think it's too early to ask, but still, what would be a fair expectation in terms of returns on the index for this year? A lot of experts have been pointing out that the era of easy money may be behind us, low single-digit kind of returns. In your prognosis, what would be a fair return expectations for the year?
Yeah, so for this year, as I said, I think it's going to be a little difficult, both for investing and trading. It's not going to be easy, but you have to be tactical and a little, short to medium term, meaning in my world, it becomes more like 1 to 4 months kind of views rather than having 1 to 3 year long term views. So not really buy and hold to that extent, whether even if you look at fundamentals, etc. So from a very top level index Nifty level, I wouldn't expect, if it goes back to the previous highs, I'm sure it'll even then sort of consolidate there for some time and not just blast through that. So on the index level, I would say, to keep expectations low, only 8, 10, 12% at max. But yeah, as I said, underlying sectors and stocks, there will still be a lot of further alpha to be made if one can be tactical and capitalize on those opportunities.
Fair point. Last question, really. What's your take on the dollar index? From 110, it came down to sub 98 levels. Of course, it's at 98.5 now, and FIIs have also made a comeback, so to say, in the Indian market. But within the emerging market basket, would you say that India looks prime for FII flows, and the trend that we have seen recently is here to stay, because the treasury yields in US are elevated, dollar index is falling. So in that scenario, can we say that FIIs are here to stay for a bit at least, if not the very long term? In fact, if not the medium term, so to say.
Right. Yes, I think so. And again, FI flows are a bit correlated to overall momentum in the market and sentiment in the market. So, we keep dissecting that data in different ways and give it a lot of importance. But again, it is important in the near term, but in the medium to long term, it really tracks the momentum if you correlate it. So given that, momentum has been again improving recently, combined with the fact that obviously all the fundamental and macro arguments for India, we all know, you're right, better growth than any other market in the world, stable, currency, stable government, etc. So given that, I think it is one of the few spots, enough people have said that. I would agree with that view largely. There will be volatility here and there, but yeah, relatively, I think the whole world is coming to the conclusion that it's a better market. And even the depth of the market has increased over the last few years, which is very good, because say 10 years back, we didn't have the depth and breadth of stocks of above certain market caps, but now we do have. So that's another thing which, large institutions and pensions and all like. So even that is ticking the right boxes now, which was not there 5-10 years back. So all of this combined, I think, yes, on the balance, they would continue, but, they would still be susceptible to some global events and what the US is doing, etc. from time to time. So I think short term, you'll need to ignore, but medium to long term, I think that will help.
Sure. Another question then, Do you think the US will be able to avert a recession, or do you think the damage has already been done to the economy? There are a lot of conflicting views on this, right? So, what are your thoughts on whether a US is really headed for a recession?
Yeah, so I think it is, but the pace may be a bit slower than what people are thinking. So in my opinion, as I said at the start of the show, that I clearly, their heydays are over, both from a market, economy, and currency perspective. But having said that, it is the biggest economy in the world. So, the larger the entity and the faster the entity has been, obviously it takes more time to sort of really go downhill completely. So I think the next 1 or 2 years, it will be like a slow decline, and post that the recession may speed up there. So the first 1 or 2 years may be confusing, there'll be conflicting signals and the recession will slowly start, and then it will sort of get full blown, in my opinion. Which is good because, globally, if there was a shock to the US, then I think everything globally would get affected. But if it plays out in this manner I described, then the world will sort of adjust itself better, and therefore, you will avert panics globally. So I think that would be good for the overall markets everywhere globally.
Sure, point taken, Rishi. With that, I would like to thank you for taking out time and joining us this morning. Always a pleasure. Look forward to more conversations in the future as well.
Thank you. Bye.
Thank you. Lovely chatting. Yeah. Well, on that note, quickly take a look at what the market is doing. Bank Nifty has slipped into the red. In fact, some bit of profit taking kicking in after 2 straight days of the index hitting record levels. But rest of the market is looking fairly strong. Nifty is around that 24,320 mark. Mid cap index now moving in tandem with the benchmarks. Sensex as well, clutching on to that 80,100 mark. But important news: Ather Energy has filed for its red herring prospectus with the SEBI. This IPO includes fresh issue of up to 2,626 crore rupees. The IPO includes OFS of 1.1 crore equity shares. Founder Tarun Mehta and co-founder Swapnil Jain will be selling 19.6 lakh shares. The roadshows have begun in Mumbai today, and the anchor book will be opening on the 25th of April. The IPO opens for subscription on 28th and closes on 30th. It will be the first large main board IPO of FY26, and in terms of pricing, they have set the IPO price band at 304 to 321 per share. So yes, first big ticket IPO of FY20, main board IPO of FY26, Ather Energy. Watch out for that. And of course, but that's about it then. We've come to the end of this show with that. Of course, strong momentum. Nifty above 24,320, and rest of the market also looking fairly strong. With that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Have a good day and stay tuned to Money Control for all your other news and updates.